Hey guys, welcome back to another lesson of price action trading. In this video, I'll teach you how to use EMAs to exit your trades. So in the previous lesson, I had taught you how to use EMAs to enter trades, but this video is the complete opposite of that. And I'll also tell you when not to use EMAs. A lot of times I do set and forget my trades, and there is a key difference on when to do what, and I'll teach you exactly that as well. So let's begin. So if you remember, we had left these positions right here for us to continue on how to manage the trades. So let me get back to this one. So right here, if you see, we have a clear EMA movement. Okay. Right now we are on 1 hour time frame. We'll just cut this so that like we'll cut it here so that it's easy for us to switch time frames. So let's say we saw this trade happening on 4 hour time frame and then we zoomed in to look for an entry. That is what we did. Exactly. So what we do now is there are two ways to move this. Now, choosing the EMA completely depends upon your choice and your experience. I don't usually use 4 hour, but for the beginning of the trade, what I'll do is, for example, when my trade actually crosses this area, I might use 4 hour time frame to keep, move my stop loss to break even. But as soon as this 4 hour high is broken, I would choose a different strategy. So at first, if you see, if you move your stop loss to break even right here, it's very simple and easy to understand that you are no more at risk. The only thing is all the reward you have, 1:2 or whatever you have around here, that is at risk and you're not securing that. But that also means when we were looking at these trades, we don't want to lock ourselves into smaller targets when there is price action where it's always creating higher highs and there is no nearby price action to find a target for us. The only thing that's stopping us is a psychological level at this point, only psychological level. So what we want to do is we want to manage our risk effectively and maximize our profits. That's what we want to do. So at this point, when your trade is at 4 hour, you use EMAs exactly like this on 4 hour time frame to put it on break even. But when you see a break of structure like this, where the wick high is broken, what you do is you move on to smaller time frame. So first, what I do is I move on to 2 hour, right? In 2 hour, I can see price has acted. This is important. Okay, this is important. If price is easily breaking this EMAs on other time frames, smaller time frames, you don't want to use that EMA, then you fall back to 4 hour time frame EMA. And if it is doing this where 2 hour EMA or 1 hour EMA is getting respected, at that point you change your strategy. You change your, for example, right here, I can see it retested and it gave support twice. Twice is always the better option rather than just once it happened and then the chances of that breaking is easy. But twice we see this has acted as support and I can see there is a distance of this much which looks fairly good enough for us to have a stop loss. So what I do now is I'll just drop this line and we'll think of it as a stop loss line. This is your stop loss line. Now I can see a distance of this much is always happening. So when my price is around this week high and I see there is a break of structure, let's say the price is here, that means your EMA is this one. And I want to keep a distance of this much at least for the price to move. And how much is that exactly? If you see, it must be a few pips. Okay, this is gold, so strategy is different here. So we can see 223 ticks, right? 223 ticks. So what we do is we just move a stop loss accordingly where we are at least 223 ticks far away from the EMA, which is this distance is looking really good and it's enough for us. Now, when we see price action like this, we can move this EMAs accordingly. So right here, the price has done this, but now you see the price action is very high and you might want to capture more of your profits so that it's secured. You are sure that this much price has been locked. So now what we do is we change our strategy, move to a smaller time frame. Now on the 1 hour, the price didn't retest this line exactly. This did reject here, but what happened right here? There must be some EMA, right? So at this point, I move to 30 EMA. I'm not going to move to 15 EMA because 15 EMA is always easily broken. And what do we see at the 30 EMA? The price retested twice exactly, right? The price retested twice exactly. So I can easily move the stop loss to right here. But even 30 unit is not so secure. When the price action is here, I can see my EMA is here. I can see it's easy to continue. But as I said, 30-minute is always not so secure. The only thing at this point is the high is broken and you want to secure majority of your position. And that's how you do it. You move to a smaller time frame and wait for it. And now the price broke it and it also tried to retest. So understand the price structure as well. Don't just rely on EMAs. It's easy to understand that price broke this high, right? That means the price, once it has broken it, it might retest around this level, even though it didn't exactly came till down here, but it is going to retest that level, right? So the price, it has to create, for example, the price is moving in a trend. So how does the price move in a trend? It creates a higher high and then it creates a higher low. So if a higher high is created, that means a higher low will be created. The price will move down. So how much movement do you expect? How much movement do you expect? So a lot of times different type of indicators, different type of tools are used to understand this. But I am not a fan of a lot of indicators. I only use EMA. A lot of people, what they do is they use Fibonacci. So Fibonacci, if you place it around here, they will look for retracement like 50-60% is normal for them for the price to continue up. But what we do is we use EMAs, and now once this price is broken, we can switch back to 1 hour when a consolidation is happening, and we can see price move like this. Now at this point, this is purely based on price action. You can see a good support here, resistance and support, and price has moved on. We have a good distance from the wick high and also the recent created consolidation. That means the first support is right here. And when the price is moving down, our distance can be easily marked like this. We wanted some distance from here. 1 hour is really good. We have a huge distance right here and we are covering our position. We are securing our position. I know in a lot of cases stop loss might get hit, but that also means trade can also flip, right? It can come all the way back here. That's why you want to secure your positions. When you are in an open end target where there is no fixed target involved, at that point your stop loss is your target, right? Whenever the stop loss gets hit, that's when your trades get closed. So you move your stop loss with the EMA. Now we see another structure change right around here. Our stop loss moves like this. We have a distance, we have a good distance right here, and then the structure got broke. Again, we have a stop loss like this. Our trade is, if you see, constantly moving. Our trade is constantly moving and it will keep on moving. It will keep on moving. There is a high right here. We have a stop loss right here. Then we see a lot of consolidation. At this point, a lot can happen. Price might flip towards the opposite side. So you may want to make sure you are securing your position, you are paying attention on what is happening. So at this point, your stop loss might be around here or something like that, where the price will eventually take you out, even though with a small distance, but it will take you out. You can't rely. So of course, you might think I would move on to 2 hour, right? And of course you can, of course you can, but imagine if the stop loss would have been right here or something like this. And if price move, you never know whether the price is going to flip from 2 hour or not. A lot of time it comes back to 4 hour. So imagine your take profit now would be 4.86 instead of 5.71. And if the price flips from right here, you would lose that as well, right? So instead, what you can do is when you see something like this, you were taken out around here, you can look for another entry. You see a support right here. Do you see a support right here? It's very easy, right? Now, this is done. We have been taken out. This thing is completely over. But now we see a support right here, right? There is a position right here as well. Exact this. I see a support right here. And also I see a resistance right here, which is also acting as a support. You see, there is a lot of consolidation right here. Now, what I want is if I wanted to enter another trade on this, I would do something like this. There is a support, there is a resistance, the price is inside this. I want to see a break of this, a retest of this area. You see, a retest did happen. And if I move to smaller time frame, look at this. The EMA retested, the 1 hour EMA, the resistance got retested, the price moved really nice, and then I can take a entry from right here where stop loss is much more tighter, I think, than the previous one. This is your stop loss at 3234. I think it's bigger than the previous one. Yeah, it's bigger. But anyway, I am trying to go 1:2. I hope that gets hit. I mean, even if I keep moving my stop loss again with the EMA on the 1 hour time frame itself, I would have been taken out right here. So the price is entering consolidation. The price moved right here. That's why I say you can't always rely on EMA, but this is higher highs and everything. And you move to different structure because 1 hour right now has not been retested twice. So you would have not kept a stop loss there. You would move to 2 hour, 2 hour again. We keep a distance, we keep moving, right? And I think I would have easily secured a TP around this area where psychological distance 2400. Yeah. So I would have easily captured another 1:2, like which gives me almost 7 plus 8% plus in the current month whenever this was happening. It was all in April. So I would have easily secured this kind of a trade. And that is how you trade. Like the price has taken you out doesn't mean it's the end of an era. You will see another trade. The only thing is you need to have an eye for it because you saw the position continued. And the other thing is I'm not always greedy to actually see 2 hour this is happening or not. If I got a 7% or whatever this is 6%, I would be just off the market. I don't want to make more money. That is me being honest. I don't want to make more money. I am happy with what I got, and I would like this is Friday around London session. Yeah, this happened around yeah London session. So I would have taken a break and not entered at all because it's already Friday. I don't want to be in the Monday slow market. Monday, Tuesday, you can see the market was very slow. And then after Wednesday, Thursday, the price started movement. So 2% like this, I can easily take some other pair, like I can easily trade some other pair instead of just entering gold again because then you are more psychologically involved because you just made a profit, you are more confident on the EMAs and everything. You don't want to take exact same trade, something similar. You can just wait for it. You just got out of the trade, enjoy that moment. Finally, after hitting your TP, after securing that profit, you can cheer yourself a little. Don't cheer yourself when you are in the position, and I'll tell you why. I guess I have said this in the past. The thing is, if you cheer yourself and the price is right here and right here, what happens is, let's say you're not securing positions, your stop loss, you're not moving your stop loss, and your profit is right here. And this is around 1:2, I think, right? You are right here. If you have a 100,000 account, you are in $2,000 profit, right? Now you have $2,000, imagine that, and now you hit a break even. That means it is now at $0. Or worse, it hit your stop loss around here. You didn't move your stop loss. You are now in minus $1,000. That means a psychological pressure of losing $3,000. You were in $2,000 profit. Your mind will say that, oh my God, I would have closed around $2,000, but I have lost now $1,000. So in short, I have lost $3,000. And that kind of pressure is not good. And this mainly happens, I have realized that is when you cheer yourself a lot. Okay. You have to understand this. When you are in a trade, you are on a risk of minus $1,000 or where your stop loss is. That's your real situation. Okay. Wherever your stop loss is, that is your real situation rather than where the price currently is. It doesn't matter until the take profit is hit or your stop loss is hit, which is most of the times, let's say in such a trade where the stop loss is moving and when your stop loss is hit, you will be taken out. Understand this, when the stop loss is hit, you will be taken out of the trade. So, stop loss is your reality. Okay. Stop loss is your reality. So you can't cheer yourself until you have secured a good position and your stop loss now means, for example, if my stop loss is right around here, I might cheer a little because then my reality is different. I am around 1:3, right? Whatever happens, I don't care. Like I was 1:5. I don't actually see the price. I don't see the price movement. What I see most of the time is this charts. I don't see my MT5 at all. It's only used for moving my stop loss. That too, like it takes a lot of time, like after After 5 hours or 6 hours, I might move my stop loss in such a position. Only then I am able to see my price. Else, I don't see the price, so I don't even care so much. I don't know what the price is moving like. So when you don't see price moving, you don't see that 4,000, 5,000 number, it doesn't affect you so much. I have realized that as well. It doesn't affect you when you're not seeing the price. So when you're seeing charts, you're more clear, you're able to understand what kind of stop loss you need to move, and it also gives you a clear vision over what you're looking at, what kind of price action you're looking at when you want to stop loss. It's not about the numbers now on how much profit you want to get out, how much stop loss you want to get out. It's completely based on your technical analysis, your strategy, and that is it. Money is not involved when you see at the charts, when you use charts to manage your trade. When the numbers are involved, you make a lot of mistakes. So anyway, now let's continue to our next position. Yeah. So the second position we looked at was this one. So here again, we chose to enter around 4 hour, I guess. So 4 hour retest, price broke structure, it's good. And anyway, for this one, we didn't use EMA to take our profit. We used price action to put a target on it. But if you would be in price action, you can use EMAs on 15 minute and 30 minutes. My bad. I'll just see what date it is. Yeah, it's 9th of August. Let's move on to 1 hour time frame. It's 24. So you can see 1 hour time frame is moving like this. This is a 200 EMA. So 200 EMA gives you a sense of direction. If you see, this is giving you 200 EMA is telling you the market is ranging. This 200 EMA is moving upside. It's telling you that the market is now trending, right? So a 200 EMA gives you a good sense of direction. The higher the time frames, and on the higher time frames, if you see the EMA line moving like this, it's giving you a direction that higher time frames are now trending upside. Now, right here, 1 hour wasn't used to retest. Okay, once it was used, but it was not a clear retest. Now, see, let's see 30 minutes. Again, I think I'll just cut the bar around this that I don't have to keep doing this. Yeah, I'll just cut this bar more. So we can see here 30-minute right here was retested and then moved up. And here, I mean, the price actually came out clearly right around here. So after this, once the price starts moving here, now you can start moving your stop loss accordingly. You can see a good retest right here, and a lot of candles actually were used to continue movement upside, and the candles will close just above. So you can keep a distance of this much and start moving your EMAs, right? So even if at this point your stop loss would have been exactly around this area, so you would have been taken out at this position even if you used EMA, because yeah, right around here, maybe a little more profit, but almost this area, right? So that is how you use EMAs to manage your trade, and this is very important. Understand this very well. Try to practice in your demo trades and everything how you would have moved your stop loss. Always, picturize things. Look at the past. Look at how trades have reacted. It gives you a lot of information. All of this I have learned on my own. Okay, no one has taught me this. This is what I have learned on my own over years of practice and over years of understanding the candles and the price action. I have seen how EMA reacts, how to use EMAs correctly, and this is how I do it. You practice all of this stuff. Make sure you practice all of this stuff. Second, make sure you subscribe my channel, hit like on this video, and join my Telegram for midweek updates. Follow me on Instagram. I hope you like this video. Thank you for watching. I'll see you in the next one.